Okay, Assalamualaikum warahmatullahi wabarakatuh. My name is Jihan Arifah Husna. So today I would like to present my analysis of PT Bank Mamat Indonesia that was focusing on its financial performance and overall risk profile from 2022 until 2025. So this presentation evaluates the bank's financial condition through several important indicators, including credit risk, capital adequacy, profitability, and liquidity. Based on these findings, we also propose a structure in risk register and strategic recommendation for improving the bank's financial health. So next, let me begin with the executive summary. Overall, our analysis indicates that Bank Muamalat is currently classified as a fairly healthy, but several financing indicates shows a worsening trend. The most significant issue is the rapid of increasing in the NPF, which rise from 0.86% to in 2022 to 3.67% in 2025. This suggests that more financing contracts are becoming problematic. So at the same time, CER has gradually declined because the bank needs to allocate more capital to cover potential financing loss. So profitability has also weakened considerably. The ROA dropped to only 0.02% in 2023 and recovered only slightly afterwards. On the other hand, the bank maintains a very strong liquidity as reflected by its low financing to deposit ratio or FDR. Also, this minimize liquidity risks. It also indicates that a large amount of customer deposit is not being utilized effectively to generate income. Therefore, if the trend continue without corrective action, the bank could experience a downgrade in the financial health within the next 1 2 years. So next, okay, we can observe for major indicators like first, NPF shows a continuous upward trends like so CR gradually decline over time. Then OA remains extremely low, indicating weak profitability, and finally FDR stays considerably low compared with the industry's recommendation range. And this indicator suggests that while the banks remain financially stable, its operational effectively and asset quality have deteriorated over the observed period. So next, it's discuss the bank's credit risks. The most concerning issue is the sharp increase in NPF from 2022 to 2025. NPF grew at an average annual rate approximately 62%. The most critical year was 2024 when the NPF increased almost 4 times compared to the previous year. So this indicates that many financing accounts that had previously been restructured eventually default. As NPF increased, the bank must allocate large impairment provision, reducing profitability and limiting the amount of capital available for future financing. Also, the current NPF is still below the OJK regulatory limit of 5%. It is approaching that threshold are therefore requires more attention. So next, for capital adequacy card erosion presentation. So this also we know like the bank CAR remains well above the best. It's a minimum requirement of 8%. The downward trend is an important warning signal. Between 2022 until 2025, the CAR decline it's like approximately 2% point every year. The main reason is like increasing need to provide reserve for NPF. Furthermore, because profitability is very low, the bank has limited ability to generate a new capital eternity. If NPF continue to increase, it's like provisioning requirements may reduce or even further, making the bank more vulnerable to like getting financial stress. So next, we compare profitability and liquidity. Yeah, starting with the profitability, the bank's return on asset fall dramatically from 0.09% in 2022 to only 0.02% in 2023. Although ROA improves slightly afterward, it remains for below the OJK benchmark of 1.25%, indicating that the bank is generating very limited profit from its asset. So this weak performance is mainly caused by high provision cost, maybe increasing operating expenses and a more conservative financing policy. In contrast, liquidity remains exceptionally strong. The financial to deposit ratio, yeah, fluctuates between 40 until 47%, which is significantly lower than the recommended range of 7 to 72%. In the other words, the bank is very safe from a liquidity perspective, but its certificates profitability because it's too cautious in extending financing. Next, for structured risk register presentation, based on the financial analysis, we identified in 2025 as the bank's financial turning point. During this year, several warning signals become much more apparent. First, NPF increased sharply as many restructured financing contracts became non-performing. Second, the continuous decline in CAR indicates that the capital pressure had already started before the NPF reached its highest level. Therefore, the structural risk register identified 2024 as the year when the financial risk shift from being manageable to becoming more critical. The findings highlight the importance of early intervention before financing problem becomes more severe. So next, okay, this one. Next, the action roadmap presentation. These identify risks we propose for strategic action. First, the bank should implement an immediate NPF reduction program by creating a dedicated recovery team or strengthening retraction efforts and adopting an early warning system to detect high-risk financing. So the second, maybe like a capital conservation plan should be more introduced to maintain the CAR above 28% while exploring alternative funding sources such like subordinates, sukuk, or strategic partnership. Third, the bank should focus on profitability optimization by reducing unnecessary operating costs, expanding digital bank service, and setting measurable sukuk or strategic partnership. Third, the bank should focus on profitability optimization by reducing unnecessary operating costs, expanding digital banking service, and setting measurable ROA improvement targets. Finally, stronger governance should be implemented through a real-time risk dashboard, a regular stress testing, and closer coordination with the Financial Service Authority, we know as OJK. Together, this initiative will help strengthen financial resilience and improve the bank's long-term sustainability. So in conclusion, the bank Muamalat remains financially stable, but several indicators such as increasing financial pressure, particularly in asset quality or the profitability, addressing the risks through proactive management, stronger governance, and strategic capital planning will be essential to ensuring the bank's long-term financial sustainability. Okay, that's all from me. Thanks for your attention. Wassalamualaikum warahmatullahi wabarakatuh.